Dear participants, welcome to Storent Europe Investor Webinar, dedicated to the currently ongoing public bond offering. We will begin with a presentation from the company, followed by a live Q&A session. We'll be looking forward to receiving your questions. Please submit them in writing through the Q&A window below the presentation. For your convenience, we are recording the session and replay will be available shortly after the call. That being said, I'm handing over to our hosts, Andris Pavlovs, founder and chairman of the management board of Storent Europe, and Bai Bonkel, CFO and member of the management board of Storent Europe. Please, the floor is yours.
Hello, welcome to Storent presentation.
Yes, welcome everyone to Storent Europe presentation about public bond offering. I first should start with disclaimer that this is bond offering, public bond offering, and please read carefully all material before making any investment decisions. I will start with summary about Storent. Storent is an equipment rental company established in 2008. The last 12 months sales were nearly 67 million euros. We have 34 rental depots in 6 countries, and we employ more than 300 people in our company. And we manage the equipment rental fleet over 160 million euros in initial acquisition price. Right now there is a public offering for the Baltic bonds. Subscription is from 25th of August till 10th of September. Latvia Bank has approved the prospectus with total amount 35 million euros, and right now this tranche is up to 10 million euros. With 10% coupon rate paid quarterly, one bond is 100 euro, and with the 3.5-year maturity. Bonds are unsecured, but with guarantees of 2 main Baltic companies, Storent SIA in Latvia and Storent UAB in Lithuania. And bonds are listed in Nasdaq Baltic bond list. Why to invest in Storent bonds? First of all, we are a company who grows and who likes to deliver better results. Right now we are in 6 countries, and in last year we expanded to USA. Our business has stable cash flow generation, and it allows us to serve our debt. The main part of our assets are tangible assets, mostly rental assets, in an initial acquisition value 160 million and fair value in 120 million euros. We are in capital market for 9 years already now, and our current investor base is around 4,500 from more than 20 countries. Our management has very wide experience in the industry. Myself, more than 25 years, and in Storent since day one. The same with Andris, who is also a co-founder and co-owner, and most of the headquarter management and country management as well. And we differ from other rental companies with our digital experience, with our digital tool, and since April we also have in-house digital team, and Andris will tell more about this later in presentation. And Storent was established from the very beginning to be the most innovative rental company in the world. So we have expert team who change the industry standards through technology, through excellent service and sustainable solutions. And we run our business with 4 main values, and they live in us and live in our business, in our customers, in our team. So first one is be in charge, responsibility for our employees, customers, and environment. Next one is seek knowledge. We like to learn new things and implement in our business. Our business is also very dynamic, so keep moving is our everyday reality. And of course, we like industry and like to do things differently and improve the industry. And our business is based on three main pillars. So first of one is people, our team. It's experts, starting management, sales team, customer service, technical department, mechanics, and also right now the digital team, which is in-house. And we build our team based on high performance culture. This means that we are evaluating performance based on real each employee performance based on objective results. The next one, and very important, of course, is equipment. We have more than 20 different product groups from trusted brands, and we keep our fleet in very good shape and make sure that we can provide good service to our customers. And technology is the third pillar, which is also very important to make our business more efficient and build the new standards in the industry. I give word to Andres to tell about the ownership and then more also about the digitalization.
Um, yes, Storent Holding Corporations in Delaware is the ultimate parent of the group and is owned equally by Ariest and myself. We established Storent Holding Corporations at the end of 2025 with one main reason. We are in process from the beginning of this year to find new equity partners, because for the next acquisitions in the United States, we don't want to use any financings which we could bring using obligations. We want to use equity money for next acquisitions in the United States. And to raise this equity in the United States, actually, we need to have a holding company, mother company in the United States. Next level, it's actually we contributed our shares of Storent Europe and put them in equity of Storent Holding Corporations in the amount of 120 million US dollars. We made evaluations of our groups, and was evaluations which we've got from the one of the big four company. Yes, we are operating in Europe and we are operating in United States. In Europe, we have 32 depots, as Barb already mentioned, and in United States, we have two locations in Texas. We own 70% of Connect Rentals. Management team consists of me and Baiba. My responsibility mainly to manage whole group and United States operations. Baiba also helped me to manage whole group, and at the same time her responsibility together with Michel Zavatskis, Storent Europe. Also, we have regional CEO. We have Guntis Greenbergs. He's CEO of our operations in Latvia, Storent SIA. But at the same time, he is also responsible for Estonia and Lithuania market. But we have in both of these countries, we have local CEOs. And Egils Misans, he's recently joined to Storent, and he is responsible for Finland and Sweden operations. He's CEO of Finland. We have supervisory board. Supervisory board consists of Michel Zavatskis. He's sales and customer service team development manager and deputy CEO of Storent Europe. He has experience in building and developing sales organizations across multiple countries. Eri Esther, he is my partner. He has executive master business administration degree from Riga Business School. Actually, we met each other in this school, and from that time we are good friends, more than 20 years already. And he's has very good experience in logistic industry, and he led himself very big projects, and actually his experience in leading large scale project is very useful for us, and actually he helps a lot me to manage whole group. And Daiga Auziņa, Melalksne, she brings actually corporate governance experience, and also experience previously. She charged Nasdaq Riga and served on Nasdaq and leading Baltic Stock Exchange development. We are operating a matrix management model. Strategy, finance, IT, and digital platforms are managed centrally at group level, while local teams have significant autonomy in sales and day-to-day operations. This gives us consistent standards across the group while keeping decisions fast and close to the customers. Actually, we are working in 6 countries, but at the same time, we are able to manage these operations, and we are able to control operations because of this matrix structure. Because of our advanced IT systems, we are controlling almost all processes, and we are very transparent. And at the same time, rental business, it's local business, and for us, it's very important that our CEOs in all our countries and our partners in the United States, they could manage themselves employees, they could manage themselves relationship with the customers, and actually this is to make local decisions. Actually, it's very important for our business because anyway, we are working in 6 countries, but in each region we are very local companies, and this relationship, we are, let's say, our business based on relationship. It's very important for our business to bring good results. These slides show Storent's development since 2008. We first grew organically in the Baltic, then expanded into Finland and Sweden, and began using the capital markets to finance growth. Following ownership consolidations in 2022, we returned to active growth phase, and in 2025 we entered the US through Connect Rental. Since 2017 we have raised 89 million through the bonds, and actually we issued first bond to finance our acquisitions of Cramo. Sometimes some bondholder asking when you are actually stopping to raise some financing using bonds. But I would like to answer these questions that if we would like to develop the Storent Group and very fast to develop the Storent Group, we cannot develop only using bank financing, because bank financing we are using mainly to increase our fleet, to invest in our machines and bring machines to our fleet. But to buy some companies, to make some M&A deals, it's absolutely not possible to get financing, especially in Europe countries, for M&A deals. In United States, we secured some financing from First Merchant Bank, also for M&A deals. But biggest part of Connect Rental acquisition cost were covered by financing which we've got using our bonds. Now, this is very simple, and for M&A we need to find some good structure between equity and debt. At this point of time, we for the first acquisitions we used bonds to finance Connect Rental acquisitions, but for the next acquisitions in United States, we decided that we definitely need additional equity, and we are working on it. As I said, from the beginning of this year, we are working to bring some equity partner and additional financing on an equity level. And the results are good, but at this stage, it will take some time. We believe in next 6-12 months, we will have additional equity partner, and this will allow us to continue acquisition process in the United States, because we have some pipeline. We have 3 companies in our pipeline in very advanced stage of discussions. But to buy these companies, to acquire these companies, we definitely need additional equity, and we are actively working on it. I am personally right now in the United States and actively working also with potential private equity companies, potential private investors, and I believe in nearest future we will have additional partners with additional resources to accelerate the growth of Storent Group. But at the same time, bonds is very important source of financing, because we are using for M&A, we are using bonds to invest in our digital technologies, in our digital products, which is a very important part of Storent concept. I would say one of the main part of Storent concept, and actually what we are building in United States. Yes, and also to invest in small equipment, which is very profitable and with very good return, but banks, actually we cannot get financing for that equipment from the banks.
Okay, and I will continue with the overview of operations. So we as a rental company offer wide product range. So starting aerial lifts, working platforms, which is used for construction inside, outside of the buildings. Earth moving equipment is important for different groundworks and infrastructure works. The scaffolding, we are a top 3 player in a scaffolding in Baltic states. Telescopic handlers are a group which has developed quite much in recent years. Also generators, where we are top 1 player in the Baltic countries, and of course different kind of small tools which are available for the rent. 99% of our business comes from B2B segment, but of course we serve also private persons. And what's important that we serve not only for construction industry, it's also infrastructure, manufacturing, agriculture, also entertainment industry with our generators. And geographical diversification. So Latvia is our home country, and there comes also largest part of our revenue. 34% from total revenue is from Latvia, and we are proud of this result. Then the second largest country in Storent Group is United States with 21%. Then comes Lithuania with 17%, Finland with 13%, Estonia 11%. I have to add that Estonia has grown quite significantly during this year, and Sweden makes very small part of Storent business. In Storent Europe, so we have different concepts in Baltic and Nordic. So Baltic, we are general rental company with wide range of rental depots serving a wide range of products. And as I mentioned, Latvia, we are number one with 24% of market share, Lithuania number six, and Estonia number three. And during last 6 months, we have improved our results. We did a lot of investments, and it improves also in the revenue. So in Europe, our revenue grew by 9%, but from our own equipment by 13%, and we improved also our EBITDA by 500,000 during last 6 months. So very good progress. We are using market opportunities and expanding our fleet, and our team works very actively to ensure the growth. And Anders will continue about US operation because that is the question which we received the most from our investor, how we are doing in USA.
Yeah, we entered the USA in September 2025 by acquiring 70% of Connect Rental. Today we operate two depots in Texas with last 12 months revenue of 16 million US dollars and 44% of EBITDA margin. The business mainly serves pipeline and renewable energy project, and Connect Rentals provides the platform for our further US expansions. We are very happy with the results which we have in United States and cooperations which we have with the previous owners and now our partners. And we've got the concept actually we think the concept is proven now because these corporations, when we are buying 70% and they are keeping 30%, is working very good. They are still operating day to day as a company. They are responsible for the team. They are responsible for the product. They are responsible for investments. They are responsible for relationship with the customers, and they have excellent relationship with the customers. But at the same time, we are bringing some knowledge from Europe. We are bringing digital systems from Europe. They are using already from beginning of April our intelligent rental management systems. We needed some time to make necessary adjustments in our systems, and now we implement it and start to use. Of course, it's just initial stage of using our systems, and probably they are using, I don't know, 20-25% of capacity of our digital products. But it's increasing every day, and the efficiency will increase, and actually the level of service for customers will increase as well. But at the same time, we secured some financing for Connect Rentals to invest in additional fleet, and this helps Connect Rentals to grow significantly. And also we are responsible for finance department, and this is our responsibilities to get necessary reporting, necessary KPIs to provide correct decisions of management about investments, about future company development. And yes, the growth very good. We have every month since we bought the company between 15 to 30% each month we have the growth. We have also some estimations for the next month, September, October, and this estimation shows excellent results. It could be between 30 to 40% growth in September, October of this year. And significant effect of growth, especially in second half of the year, giving us investments which we made at the beginning of year. We invested 12 million in Europe. We invested 8 million in United States. And of course, these investments usually we are making at the beginning of the year, and the real results from these investments just coming on the second half of the year. We are still continue. We still have the same model. We have two complementary models for US growth. One is the equity partners, we are going to buy 51 to 70% of the strong regional rental companies, while preserving local entrepreneurial motivations and the digital partner networks also. At this point of time, as I said, we have Connect Rentals already in our network. We have 3 companies in our pipeline for equity partner. But as I said, we need equity, and we will not use any more financing which we are raising using bonds to acquire companies. We need additional equity. That's why we are not, let's say, moving forward these 3 acquisitions. Yes, we are working also to build digital partner network, and we have pipeline approximately with the 5 companies. And I believe in next 6 to 12 months we will have at least couple of digital partners. We are in process of signing agreements, negotiating the terms, and finding some way how to cooperate. And also we need to allocate our digital team resources. Actually, it's at this stage, in a couple of months we will be able to do this also. As I always, Baiba at the beginning of our presentation said that we are trying to redefine rental industry. And I would like to give you some example to understand what is the difference between Storent, how we are doing our business, and let's say classical rental companies doing their business. Actually, it's very good to compare with the taxi industry, like with a company like Bolt, Uber. They are still providing the same service. Actually, person needs to be from point A to be in point B, and the service is the same actually. But the way how we are getting this service, how we are ordering, how we are paying, what is our experience, user experience, it's absolutely different. And in the same way, actually, Storent working. We are providing the same service. Our customers, they need equipment, they need to do something with this equipment on the job sites. But the way how we are doing, the way how we organized our internal processes is absolutely different. And it's not possible to compare with a classical rental company. We are trying to be very effective in internal processes, and also we are looking for the new way how to provide services to our customers. And here you can see one of the small example. Probably we only one company in a world, and from which you could rent equipment just using your phone and without visiting us, without calling to our employees, without sending any emails. Actually, everything is possible to do remotely. And today we are also start to utilize artificial intelligence sales agents, and this is only one small example how we are doing our business, and actually what we are changing and why we investing so much money in digital technologies. Our digital ecosystems consist of intelligent rental management systems. This is the backbone for our group, for our companies, and for Storent Group. This is ERP systems which we built ourselves, and this is ERP systems for rental industry. And it covers whole rental process, and it's like a crucial part for to increase our efficiency to serve our customers. And you can see we invested mainly our investments goes in IRMS, and at the end of June 2026 we invested approximately 14 million euros. Next layer of our digital systems, this is a cooperations hub. This is a level which allow our partner to cooperate in the future, and this is a level which also will bring some leads to our partners in the future in the United States, but it's already working in the Baltic countries. And cargo point, this is logistics systems, but our system consists also Microsoft D365, Power BI, and all our products are integrated. And at the same time, when we are making some transactions, it's synchronized to our bookkeeping program, accountant program. And allows us to have full transparency. This allows us to get any reporting. We can get actually profit and loss statements for specific for specific machines. And at the end of the day, we need these informations to make right management decisions about investments, about opening new locations, decisions like this about hiring people, what products do we need. All this helps us to make correct decisions in the right time.
Yes, and let's continue with financial overview. So as I mentioned, our last 12 months sales revenue is almost 67 million, so compared to year 2025, where it was 33.8 million. Our EBITDA stayed more or less the same, improved a little bit. As I understood, we are expanding in USA, and it requires also additional costs to expand the business in Connect Rentals and also in Storent USA. We are building the headquarters in Austin. In USA, we hired also first employees. In March, we participated in the largest rental industry event, ARA Show, with our booth there. So, and also working with the investor bankers to attract new equity capital. It also they cause some additional cost. And our profit before tax is positive with symbolic profit, but we invested lately quite a lot, and of course our debt increased, so also depreciation and interest expenses are increasing. And I have to admit that first 6 months we worked with the losses, but that's absolutely normal for our business because we have quite a seasonality. So first quarter we'll work with the losses, and then in second quarter, starting spring, the season activates. Then we start to generate more income. The third quarter is most profit generating quarter, and then the last quarter again the activity is slowly reduced. So our seasonality also affect our results. And in second half of year, it should definitely improve. But we have very good improvements in our revenue, and that proves that the investments are done well. And if we see to sales income structure, then most part of it is 80% makes rental income, and 90% from rental income are from our own equipment. And you can see that we improved especially part from our own equipment and reduce split rent, so that also improves our profitability. And there's different customer concentration in Europe market and United States. So in Europe, our customer base are quite diversified. Top 100 customers makes only 28% from our total revenue. But in US, it's much more concentrating. Top 10 customers makes 54% from our revenue. But that also allows to work with better profitability because customers likes our service and they are not so much price sensitive in the United States. So yes, as I told earlier, we expanded our fleet significantly during the last few years. You can see before the ownership change, our fleet even decreased from 100 million to 91 million initial acquisition value. But lately, with the US acquisition and quite a big, large investments in the Europe operation, it expanded to more than 160 million in initial acquisition value. Of course, we need to also renew our fleet, and that's normal part of our business. And there we use also the bond money for that and leasing liabilities to renew our fleet. And we do it very carefully to invest in the product groups which are where we see the larger demand in the market. So investments decisions are made very wisely, taking in account our very wide experience in the rental market. And we also move fleet between the European countries because industries have different cycles. So when we see there's higher demand in one country and free equipment in another country, we move equipment to ensure higher outcome, or we call it payback or financial utilization from the fleet. That's very important element that the fleet is managed well, and it's and of course analytics help us to do that quite well. If we look on the balance structure, our long-term investments makes almost 144 million, and 120 from that are fixed asset, mostly rental assets. And on the debt side, we have almost 107 million debt. A larger part of that makes the bonds, almost 46 million. Then comes leasings, where we finance the equipment, and we have also a revolving credit line from First Merchant Bank in the United States, and also a smaller amount from Signet Bank in Latvia. We monitor our financial discipline with two covenants, and one is net debt EBITDA, not more than 4.5. At the moment, we are 4.21. It's increased because of seasonality. As Andres explained, we are investing in first half of the year, and debt is also increasing, and then EBITDA improves in second half of the year. The equity ratio minimum is 30%. We are now at the 31%. As Anders explained, we are working quite actively with the new equity partner to ensure that we are not below the 30%. And for this year and future years, we plan to keep with the same covenants in all bond programs. And market, here a slide about the market. It's quite favorable for us. So rental equipment market grows around about 5% in the Baltic countries. The same trend is about construction equipment, construction market. So we see that Baltic countries increase are higher compared to all Europe increase. And of course, the defense sector, also infrastructure project like Rail Baltica is helping the general market conditions to improve. Also, Nordic countries slowly improve after a few years of decreasing. So we see also the renewable sector is active with solar panel parks and windmill parks. Also, the data centers are very nice industry in the Nordic countries because of favorable weather condition and also available energy resources. But of course, we see that the U.S. market has the largest growth, and especially also Texas, where we operate, and also next targets which are in our pipeline are also in the Texas. So we see the market is very active. Also, the renewable sector, different kind of factories are moving to Texas, and economy in general is growing, and construction. If economy is growing, also and construction is growing, and this is our main sector where we rent our equipment. And about the bond offering, and I want to remind that we are experienced bond issuer since 2017. Already 3 programs are repaid, and 1 program is due this year, September. Partly it's already exchanged, and now 6.7 million are due in September. So this bond offering is up to 10 million. And yes, subscription is until 10th of September with 3.5-year maturity, 10% coupon rate paid quarterly, and guarantees from Storent Latvia and Storent Lithuania. We offer also exchange a fee for those who decide to exchange our bonds, which are due September, additionally 1% for exchange. And bonds are listed in Nasdaq Baltic regulated market in a bond list. And yes, the main use of proceeds are exchange, and 3.3 million goes to general corporate purpose, including investments in smaller equipment, the digital tools, and other costs. And that's actually all from official presentation. A reminder that please read all materials and learn also about risk factors. But now we can move to Q&A session. I hope there are some good questions.
Not yet, but this is a good moment for a reminder. Participants, all your questions are more than welcome through the Q&A box that you see below the presentation. The questions can be submitted either with your name or anonymously. We'll start with the first one that has been submitted prior the call. When approximately will happen the early redemption of the 2028 and 2029 year bonds?
Yes, we organize voting to put these conditions in our prospectus for bonds 2028 and 2029, but at this point of time, we don't have any exact plans of early redemption, any specific plans. It is connected to probably future equity partners. It depends with whom we will go further. For some companies, the level which we are looking for equity, it's too small, and to increase the level of financing from this private equity, we had some ideas. Probably it could be mixed equity and debt, and in this case we could refinance some bonds. But at this point of stage, we don't have any specific plans, and most probably they will. I think most probably they will stay till 2028 and 2029.
Thank you. I don't see any new questions just yet, so let's wait a couple of seconds to see that, to make sure that we address all of them. As there are none, I suggest we then slowly close the call. Before doing that, I'll return back to the management for the final remarks.
Yes, I would like to remind that all information related to the bond offering is available on our webpage, torrentholding.com. Also, my contacts are available there, so please feel free to contact me or my colleagues if you have any additional question. And if you can't find our bonds in most popular banks in the Baltic or other sources where you do your investment, please let me know as well. For us, it's very important that the infrastructure is working well and investors can subscribe for the bonds.
Yes, thank you very much for joining our presentations, and we believe on your support on investments, and thank you for people who investing in Storent bonds. With your support, we can develop Storents and can go in new countries like we did it in the United States. Without support from bondholders, we would not be able to do it. I would like to say one more time, thanks all of our bondholders who believes in our story and who invested in Storent. Thank you.